Should you buy the dip that happened in yesterday's stock market and get back into those chip stocks, or add to those chip stocks that just utterly tanked yesterday? What are the reactions of people like Sam Altman, Nvidia, Elon Musk, Donald Trump? What kind of new tariffs are we now expecting, including potentially an Iron Dome and some other executive orders we'll cover from Trump? We'll cover all of this related to DeepSeek, as well as what the popular arguments are now. Remember, yesterday we had a reaction day, and we're going to go through today what the popular opinions are now after people have had some time to digest everything about DeepSeek. So we're going to look, was this an overreaction? Is this a buying opportunity? Is this a real problem? We'll analyze it all. Well, also, I quickly will get it out of the way. I want to talk about the Microstrategy shelf and some price action, and then we'll also have an update on the Tesla Optimus towards the end of the video, along with our typical dad joke and daily wealth on today's Meet Kevin Report. News that makes you money. First, Microstrategy yesterday, they issued an update on their shelf offering. And it's actually very interesting if you look at it, because what the shelf offering shows you is that they had, over the period of January 1 to January 26th, spent about $1.1 billion in cash to buy another 10,000 Bitcoin for a cost of about $105.5 $1,000 per Bitcoin. They had another 4.35 billion of shares available for issuance as of the morning of the 27th. In my opinion, MicroStrategy actually fell as much as 8% yesterday because they sold stock to raise cash, and then they bought Bitcoin. And as Bitcoin went up, because they hold, over 470,000 Bitcoin, as Bitcoin bottomed around 2 p.m., so did MicroStrategy, with big buys coming in at 3 p.m., MicroStrategy also following up. I kind of think it's interesting to look at. Some people look at it and say, oh my gosh, how much longer can they keep basically selling Bitcoin for 2 times what it's worth by selling their stock, other people buying it. But then, of course, you have the debate around, oh, but they have software technology. Other people say, oh, but they're losing money. Anyway, it's an interesting thing to pay attention to, but maybe not quite as interesting as the potential that Elon Musk is pooping bricks when it comes to DeepSeek. Yeah, we got to go into this one in detail. And look, this is going to be entertaining. Today's my birthday, by the way, so I'm excited for the entertainment of a birthday. I'm 33. We have Meet Kevin coupon code going for anybody who wants any of the courses on building your wealth, Trumponomics, trade alerts, lifetime access to the course member live streams. Check it out over at meetkevin.com. We'll keep the pitch short because it's the birthday. Let's talk about Elon Musk pooping absolute bricks. So XAI raised $6 billion in May at a $24 billion valuation. And then they ended up raising another $6 billion after that. Another $5 billion at a $50 billion valuation in November. So in other words, the valuation doubled and they raised roughly the same amount of money. And they have about 100,000 H100s that they use to train Grok. The system's called Colossus. Some say that Elon could be really, really quiet about DeepSeek on purpose because he's freaking out that the valuation at XAI just got reamed. Now, I don't know that necessarily this is true. So what I wanted to do was get some hints from what Elon Musk is essentially up to on Twitter, or X. And what I found was that Elon Musk didn't actually tweet very much. He, at one point, expressed a jade about potentially this Chinese firm running DeepSeek, the hedge fund, having a bunch of H100s. In other words, suggesting that they didn't train this on the older, lesser chips. They trained him on H100s. They have a lot of, and that's fine. The reality is whether they used H100s or some older versions of chips, that doesn't actually matter as much for this situation. And you'll find that's true in just a moment as we go through that may not have anything to do with what's going on here. But here were some of his actual replies. So look at this and then help me understand what you think he's up to. So what do we have here? He retweeted Jack Dorsey saying, open source everything. Okay, that's interesting because XAI doesn't open source their Grok. but retweets that everything should be open sourced, okay? Then he trolls Jim Cramer on NVIDIA's collapse because Jim Cramer ended up tweeting on the 22nd that NVIDIA's basically been trading sideways and it's setting up for a breakout. And then Elon Musk yesterday wrote, no kidding, obviously trolling given that NVIDIA was down 15+% yesterday. Then the only person that Elon Musk actually replied to about DeepSeek was this guy, Gavin Barker. Now, Gavin Barker, in his message, says that Grok looms large, and he basically talks about how amazing Grok is, and stay tuned for Grok 3, because in a few weeks, it'll be epic and it'll be so good that it might be able to cure cancer. Well, that's a very nice thing to say about Elon's Grok. To which, of course, Elon replied, this is the only DeepSeek related, like directly related to DeepSeek reply I could find. Elon goes, interesting analysis, best I've seen. Okay. So the best analysis you've seen is the one that basically says Grok's going to cure cancer. Got it. Okay. And then AI, spelled as AJ, will be everywhere. Except small little detail, Gavin Barker is also a reportedly large investor in XAI and a hedge fund manager, and he's been pumping up Grok for many months. Oops. It's kind of interesting. So this has a lot of people sort of putting together this thesis that Elon's been pretty dead quiet on DeepSeek. I mean, other than throwing jade around what chips they're using, which really doesn't matter, making fun of Jim Cramer, which everybody does, and then pumping up an investor in XAI, he basically hasn't said anything. Which is interesting because most of the time you hear Elon Musk say something like, oh, no, that's fake news, or that's a scam, or something. I actually think Elon has looked at this model and gone, damn, they actually did something great with a lot less. Are we wasting money on NVIDIA chips? That's my take. Now that becomes very, very important for DeepSeek. Because remember, DeepSeek is all about reducing the costs of either training or even inference. Now that becomes important. That'll be a debate we'll talk about in a moment. But if companies led by people like Elon Musk start going, dang, we now have too many H100s or too many chips, we don't need this many chips, they're not going to dump these chips or sell them. They'll make do with what they have. They'll figure something out to do with them. But they'll certainly be thinking about how to become more efficient. In fact, that's exactly what Sam Altman said. See, Sam Altman actually called the model impressive and then went out of his way to say, hey, by the way, don't worry. We've got some cool announcements coming up, including, basically more, we'll be working on making things more efficient ourselves as well. Take a look at this. DeepSeek R1 is an impressive model. It's an open source model. He could have easily bagged on DeepSeek, Sam Altman. So could Elon Musk, but they're not. The big leaders in AI are telling you, crap, this is actually really good. DeepSeek is an impressive model, particularly around what they're able to deliver for the price. We will obviously deliver much better models, and it's also invigorating to have a new competitor. So we'll pull up some releases. It's sort of implying like, don't worry, we've got, things in the bag, so to speak, ready to release. But mostly, we're excited to continue to execute our research roadmap and believe more compute is more important now than ever before. Sure. This is one of the arguments we're going to break down. Is more compute going to be required now after DeepSeek than before? But fascinatingly, you actually end up also having Donald Trump then chime in and say, hey, this is actually very much a wake-up call to Americans. We are behind. Some VCs call this the Sputnik moment, where Russia was basically 10 years ahead of us in their lunar program. Of course, we did land on the moon and they didn't. But anyway, it was a wake-up call. And it was like, wow, okay, yeah, other countries can actually get ahead of us. And so Donald Trump is like, hey, this is a wake-up call. We all should figure out how to learn what we can here and get better. By the way, Donald Trump ends up saying, hey, a lot of companies will end up saving billions of dollars. This is great news. So Trump actually sees it from a typical sort of like almost real estate developer, where he's like, hey, if you could save money, why spend more money? Like, let's stupid proof it for a moment. If you have 500 nails and you get a permit, or you only need or want one house, and you need 100 nails to build the house, obviously I'm oversimplifying here, right? Are you going to use more than 100 nails? maybe you'll use 110 because you dropped a few, right? And obviously I'm making up the numbers, right? But you'll have about 400 extra nails. It's sort of like having extra usage available to you on ChatGPT. Like, are you really burning through all of your AI usage that's available, right? Now let's say an innovation comes along in construction and it just takes 5 nails to build your house together. Well, I mean, that's wonderful. You've just saved 95 nails. Now you have an extra 495 nails. And so then a lot of people wonder like, oh, well, that's great. That means people can build houses cheaper, so nail manufacturing will go up. And I'm like, huh? Nail manufacturing, aka chip development, is going to go up because we need fewer of them? Man, this just sounds topsy-turvy. And then I realized, no, the only way nail manufacturing is going to go up, if all of a sudden there's a step up in the innovation that makes me want now 5 times as many houses. In other words, more artificial intelligence. So this is where we have to ask ourselves, is artificial intelligence going to create somehow more demand because all of a sudden it's better or it's more innovative or it could do more for less? If we could increase the demand side, then yes, we'll manufacture more nails, we'll manufacture more chips. But if the demand stays the same, so just keep that very clear. If demand stays constant and cost goes down, and we don't need more demand because we're not demand constrained, there is no price elasticity then what ends up happening is the people like Elon Musk who were buying the chips, they just save money. Like Donald Trump himself said, they save money. So less people are buying the chips. Fewer people are buying the chips because they don't need as many of the chips. Now, this is all incredibly important because, again, your industry leaders aren't calling DeepSeek a scam or a psyop. In fact, even NVIDIA is applauding DeepSeek, coming out with a statement saying, hey, this is exactly what our chips are designed to do. They're designed to bring efficiencies into artificial intelligence so the world can benefit. Hey, they're taking the high road in the day that their stock was down 16.9%. So no doubt here that DeepSeek is real. It's an open source model. Elon Musk isn't calling it a scam. NVIDIA isn't calling it a scam. Sam Altman isn't calling it a scam. Sergey over at Microsoft isn't calling it a scam. So far, everybody is arguing this is impressive. Now, what happens is the next phase, which is questionable. The next phase is, okay, who benefits? Where can we go make money in the stock market as a result of this? And that's something that we have to pay attention to because if you look at least over this last 7 days, take a peek at what we have here in Google search trends, you've actually got DeepSeek outperforming ChatGPT. You could really see that moment right here where DeepSeek comes out and takes over GPT in just really the last day. Now we'll watch this, but let's understand some of the arguments that go into what's next for DeepSeek. Oh, and also, quick note, some people were asking me about Microstrategy and STRK. That's the preferred offering for certain people, mostly institutions and some retail, I guess, that they favor or whatever. That's not out yet. That's expected to price at the end of the month. Anyway, all right, so let's talk about the first big popular argument. So one of the popular arguments right now is chips are used for inference, not training. And so all people on the internet today are freaking out because, DeepSeek makes it cheaper to train, but wait a minute, we need chips for training. So don't worry. If it's cheaper to train, we'll have more models, demand will go up, and then we'll end up using more chips because we want more inference. But this runs into a really big problem. There's the problem of locality. And this is actually where, as I mentioned on Friday, as I mentioned on Saturday, and as I mentioned in yesterday's Alpha Report and the Meet Kevin Report, Apple is a style of a winner here. Now, this is where things get really fascinating. Look at this chart. This chart shows you what it takes to run different distillations of R1 on a local computer. Now, what's very important to know is that the full-size model is 671 billion parameters. But one of DeepSeek's innovations is that you don't actually have to run the full model for inference. In fact, You only need to be capable of running the 32 billion parameter model. And when you run a query, this is the innovation of R1, it selects which 32 billion parameter segment of the model to use. So that way you're not using the entire model, you're just using a portion of the model, and it's the portion that you need. Now I can run a 32 billion parameter model with 4 NVIDIA 4090s. I literally have those in this house. People are daisy chaining 4 or 5 Mac minis together to run the 32 billion parameter model. So the point here is that DeepSeek actually has a huge innovation in, oh my gosh, we don't need to run the whole model. We could just parse out the section we need, which means compute required to run these models is substantially lower than we've ever thought before. Now, we're not yet where I could run the 32 billion parameter model on my phone, but I could run the 8 billion parameter model on my Mac. I could daisy chain a couple computers together, and I could run the 14 billion parameter model, and I could run a lighter version on my phone. Soon enough, though, we will probably have powerful enough phones, and we already have powerful enough computers to run substantial versions of these. But soon enough, my take is our phones will be powerful enough to locally run our own private version of R1. And that, I think, is where people are missing the boat. People make the argument in popularism right now, the populist argument is, oh, demand for NVIDIA chips is going to go up because more people are going to end up using AI. Well, first of all, nothing has changed on the demand curve, okay? The innovation has not changed. And I think that's what like drives me nuts. And I was talking about this yesterday with course members, I was with course members yesterday and I drew this like crappy drawing out. I'm like, look, AI used to be called neural nets in 2018. Then in 2023, we had the chat GPT moment, and all of a sudden, we got, oh my gosh, 3.5, and then we got 4.0. And this was great. This was a good leap forward in sort of chatbots, which basically I call universal definite, like I drew a define button here because I'm like, chatbots are going to be as ubiquitous and as much of a commodity as a dictionary. Like, do you really care if you're using Merriam-Webster or dictionary.com? 99.9% of people, with the exception of grammarians, do not care what dictionary. Like it doesn't just give me a dictionary. I just need to define a word, okay? That's basically chatbots. And the innovation has essentially plateaued. Even the CEO of Microsoft has said innovation plateaued. He said it as recently as December, which is crazy because I don't think that folks are paying attention to this who say, oh, demand is going to substantially skyrocket. Not only has the CEO of Microsoft said it, but I took a screenshot of this here. Ilya over from OpenAI in November said that pre-training has plateaued because there's only one internet to train and the largest LLMs already have been trained on most of it. Now, of course, we could use, like Andre Kapathy says, we could use artificial intelligence to create our own synthetic data and then try to train off of that. But I don't know that we're there yet. That might be the next innovation, which could be in 6 months, 6 years, or 30 years. But right now what's happening is we had our GPT moment. We've spent a lot of money on chips and marketing. DeepSeek has come along to basically make this spending look foolish. And we still have not had an innovation that's actually increased demand. That's the problem. That's the big thing that I think a lot of people are missing. In addition to that fact that we could probably start thinking about running these models locally if we needed to. So if we're a small business, we can now compete. A small business can very cheaply pick up Mac Minis or 4090s or the soon-to-be 5090s and run your model locally. I actually think it's a great business idea. You could set up a consulting shop and market, hey, here's your R1 local server for $15K. You put the parts together for 10, you take a $5K profit, preloading it all, making it easy for people. You go sell it and market it, done. Now people have local R1 and they don't have privacy concerns by sending all their data up to China or whatever model takes these benefits of scaling or of how we're using portions of the AI to be more efficient. Now, this in part is probably why Apple is winning. See, Apple has pricing power because they have the ecosystem. They didn't blow money on the LLMs. No, instead, what they did is they said, hey, we're just going to keep trying to have, and obviously they're always behind, but we're going to try to have the best product that eventually we could just run LLMs on directly. Now, the current AI they have absolutely sucks. There are memes going around that Apple's AI is so bad that their stock goes up when AI stocks tank. Yes, this is true. Right now, it definitely still sucks. There's no doubt about that. But remember, investing is all about thinking about the future. And the future seems to be that running AI locally as a commodity, kind of like you run a dictionary on your phone or your iPad or your laptop, is probably the direction we're going. And that is not a beneficiary, like NVIDIA is not a beneficiary of that as much as I think people think. I think it's more the local companies, the companies that can sell you a computer, basically, that they're potentially beneficiaries. Now, you have to be careful with this because Apple sales, like iPhone sales in China, are in a slow cycle. You're almost in a recessionary cycle when it comes to PCs and smartphones because sales are actually declining. So you kind of have to be careful, like, oh my gosh, okay, I'll go all in on Apple, unless you see this as temporary and a buy the dip opportunity. The thing is, it's not just Apple though. It's Xiaomi, it's Huawei, there are a lot of competitors, Samsung, and they can all be a part of that local device provider. So keep that in mind. Now, again, people argue that demand is going to go up. This is the popular argument. I gave that nail example because we don't really know if demand is going to go up. And even The Economist reiterated this. They said that DeepSeek's innovations suggest that the upfront cost of training a model may plunge. And now we're deploying more computing power at the inference stage when the model responds to questions. The models are able to now think or reason to give us better answers. Okay, first of all, this whole reasoning thing is just utter BS. It's not reasoning. What it's doing is it's prompting for you. So you throw your question in, and then it breaks apart your question into little prompts, and it basically prompts itself. It's like an auto prompter. Remember in 2023 when everybody's like, oh my gosh, you're gonna have to become a prompt expert and prompt engineering is going to be the biggest career in the world or whatever? I'm like, that's bullcrap. Like, you should not have to be a prompt engineer. And then sure enough, the reasoning models come out and they do the prompting for you. That's basically, it's not truly reasoning. It's like faux reasoning. But anyway, The Economist goes on to say, the opposing forces of cheaper training but potentially pricier inference have unclear impacts on what's going to happen with compute demand. We don't know if more demand for inference, if we even have more demand for inference, is going to lead to more chip spending, if we could be so much more efficient on the training side. But remember, The Economist doesn't mention this. R1 is so innovative because it's A, cheaper to train, but it's also cheaper to infer from because, again, you're only using a portion of the model. You're not running the whole model. Again, people are missing this. So my take is that we've got to be very careful jumping to conclusions, and there's certainly going to be a lot more time that goes into this, but there are other popular arguments. For example, the next popular argument is all of this is just an overreaction. We still need chips, and yes, like Bernstein wrote a big letter. They're like, yes, DeepSeek is great. We looked at the open source, it's great. It's 20 to 40 times cheaper. In other words, they admit that DeepSeek is cheaper. And then they argue, but we're still gonna need chips, so please don't sell NVIDIA stock. Okay, maybe that's true. Maybe NVIDIA will be fine. But one downside that I think people are forgetting is that with the absence of a new innovation or a new step up in AI technology, what actually ends up happening is you end up trending down your NVIDIA sales. Now, I'm not talking about a big plummet. This is something that takes time. I think that if you were expecting to have 30% EPS growth at NVIDIA over the next 5 years, you might actually see that slowly get written down by analysts. And then in reality, remember NVIDIA sales were beat estimates by 2% last quarter. You might actually see NVIDIA start missing. First they miss by 2%, then they miss by 10%, or then they guide lower. And all of a sudden EPS isn't growing at an average of 30%, it's growing at an average of 15%, and then 10%, then 5%, and then, oh, interesting, it's starting to shrink. It's not, I don't believe that overnight people are going to go cancel all the NVIDIA orders. But I do think that this is a major catalyst that says we need fewer server racks. We need less energy. We need fewer chips. And I think this is where, if you look at some of the other stocks that got hit, it's Supermicro Computers got hit. Well, of course, because if we don't need as big as servers and we don't need even more servers on top of what we already have, then of course Supermicro is going to get hit. Of course Dell is going to get hit. Of course ARM, Oracle, and NVIDIA are going to get hit because they're all beneficiaries of this infrastructure spending continuing. Siemens Energy crashed like 20%. Other energy and uranium companies, VST, CEG, GEV, Oklo, they all dumped like 20% yesterday due to the energy sell-off because markets are like, okay, I guess we just don't need that much energy because if it's local, then you're running it anyway. Probably don't need that much energy because you're able to run it locally. And you don't need the high performance compute of the H100s. But honestly, even if you did and you went to Blackwell, remember, Blackwell is 25% more. Oh, wait, I'm sorry. It uses 25% of the energy. So it's 4 times more efficient than the H100. And so again, you have this duality where the chips are using less energy, but now we potentially use less energy to train, but also less energy to compute or to infer what the user wants. Why? Well, because you're only using a part of the model. That's the innovation. Now, of course, this is exactly why people are saying, okay, well, then sell all tech, sell all the chips. I don't know that you need to do that. I never encourage sort of panicking, but it makes sense why potentially the big growth estimates for some of the chip plays could be over. Another thing that to me kind of sends a signal that DeepSeek is a big deal is yesterday DeepSeek got hit by a cyber attack, which has a lot of people wondering, did they get hit with a cyber attack because they're so good that somebody's trying to take them down? I kind of think so. Now, where else are people going? Well, Cathie Wood is buying into Salesforce via ARKG. She actually dumped Tesla to buy, and Palantir actually, to buy Salesforce. Others are suggesting Adobe or DocuSign. Basically, the software layer could be a beneficiary. I'm still not convinced that the software products are that good that we want them en masse. I mean, Palantir is pretty good, but a lot of the small business and medium business related software problems or products, they run into the problem of scale. So they're really good at individual tasks, but when you try to deploy them across an entire organization, they're still running into scaling issues. So it's going to be something that we have to look for companies to actually solve. I think Palantir has an edge there with the government, but the problem with Palantir is people realize that finally. I've been saying for 2 years that Tesla and Palantir are like the real AI that exists out there, and markets have finally adopted that thesis, which is great. The stocks have performed very, very well. The downside is now the valuations are very, very, very high. Now, the market here, they say that overall we're in deep doo-doo, that we're basically looking at 60% of the S&P's 29% return over the last 3 years coming from the Mag 7. And if it is true, Kevin, that NVIDIA earnings are going to go down because we don't need as many nails, so to speak, then remember, NVIDIA alone out of those Mag 7 was responsible for 25% of the return of the Mag 7. And this is where those bubble analogies come from. And when very few concentrated stocks pump up the indices, what happens when those earnings start faltering? Goldman Sachs talks about individuals going into profit-taking modes, but potential opportunities existing in Chinese stocks, since there are a lot with a lot of good models. Moonshot AI, Tencent, ByteDance, Buy, Minimax, Alibaba. Many companies working Chinese AI. Now, I always question investing in China, mostly because I don't have the insight into China that I feel like I do in America. But it's an interesting point of view, and a lot of people see some potential in finding Chinese investments to make. I personally think we'll catch up in America and start using segmented LLMs the way R1 does for inference and also more efficient training. Now, the marketeer also argues, and Goldman says, don't rush to buy the dip. Both of them said that. Goldman argues that right now, Commodity and Trading Association stock traders are, quote, max long, and there's basically no risk premium that you're earning if you're investing in stocks right now. So they really question if investors start becoming curious about artificial intelligence capex, and then leaders like Elon Musk or Mark Zuckerberg or Sergey Brin over at Microsoft, they start pulling back spend, and we're going to have a smaller set of earnings from the chip-related companies. So be careful about that. Goldman says, could it lead to more spending in the long term? Maybe, but it could also lead to a big correction first, and one that sort of bleeds out over time. It doesn't have to be day after day red. You just kind of have to wait to get the new estimates, the analyst updates, and everything. Like if NVIDIA puts out a press release and says, hey, by the way, half of our orders just got canceled, markets are going to react very quickly, but it's not going to happen today. It's going to take weeks to get this sort of information. Then we have information. We talked about Apple already briefly. I just want to mention that The Economist points out as well that volumes in semiconductors outside of AI, PCs and smartphones, still suffering. So just also keep that in mind if you're investing in some of those aspects, the PCs and smartphone sectors. They're just not doing great right now. They're still in a bit of a recessionary environment. UBS argues that ultimately we could see innovations that end up driving more demand for chips. But again, I like to argue, well, show me the innovation. Because so far I've been looking at AI bots for the last couple of years, and I feel like after 4.0, we didn't get that far ahead. But then again, maybe you have a different opinion. I mean, yeah, look, we're able to like search the internet now. Originally, we weren't able to do that. We had dated information, but that was sort of an obvious step forward. Now, Standard Chartered comes out with sort of moving on, if you will, from DeepSeek for a moment. Although what is also kind of remarkable is DeepSeek did end up coming out with a vision deployment model to compete with Sora and Midjourney and some of the other image generators. And people are like, how do they possibly keep coming out with more products when they're already dominating like this? Of course, that is leading to some memes circulating, like a picture of Sam Altman on the phone going, launch the porn Sora. Anything to basically get it up. I mean, get demand up. But anyway, let's move on a little bit from this. Let's talk about the FOMC. So we've got the FOMC meeting tomorrow. There's a small indication, well, Standard Chartered argues that any indication that we potentially get an interest rate hike would end up being very bad. They argue that any kind of firming in the labor market could end up reiterating the potential for hikes, and equities would sell off under any indication of interest rate hikes, especially after this sort of DeepSeek moment. Any kind of optimism on disinflation, though, would be very, very helpful to markets. So prepare for the Fed tomorrow. This is sort of a little warning on the Fed, I guess. Personally, I don't think there's much of a risk that Jerome Powell is going to talk about hikes, especially after the DeepSeek moment. I think it's much more likely that they're going to actually applaud the disinflation that comes from a DeepSeek moment, because that's like what Trump says. Hey, you can all save billions of dollars now. After all, the Anthropic CEO says it costs about $1 billion to train a model these days. If DeepSeek did it for 5.6, that's great. It's like pure deflation. This is actually wonderful for Jerome Powell. Come on, baby, turn the money printer back on. We need it. Then you got Donald Trump. He announced 4 new executive orders, an Iron Dome to protect America, transgenderism out of the military, stop the indoctrination of our troops with critical race theory, and offered full reinstatement for those expelled due to COVID, refusing to get a COVID vaccine, and people would be reinstated with their former rank and full pay. He also somewhat suggested, by referring to 1887, that we used to have so much money from collecting it from tariffs that we were able to get by without an income tax. Some people then sort of took that and said, oh my gosh, he wants to get rid of the income tax. I mean, he suggested that in the past, but I think we got a long way to go. Let's see how we do with some tariffs first. Besant was approved And some people think that he's actually in favor of some form of universal tariffs. And some say we could see tariffs as soon as this weekend on Mexico, Canada, maybe even China. You also, by the way, have Donald Trump suggesting placing tariffs on chip manufacturers outside of the US. This would actually include Taiwan. And he argues if you don't want tariffs, build your plants in the United States. Morgan Stanley had a bit of a piece on Optimus. And this is Adam Jonas, who used to be a Tesla bull. He actually doesn't include Optimus robots in his 2040 valuation model because he says the battery technology just isn't there. That current humanoids really only run on about 50 minutes, maybe up to 2 hours of battery time. And unless you want them in a factory plugged in all the time, you're not really getting a functional humanoid robot. Therefore, it's going to be a while before we actually get these functional. Now, a lot of people think and listen to rumors that Elon Musk wants to manufacture as many as 600 Optimus robots by the end of the year per week. It could be possible and in line with his goal to have a lot of Optimus robots working in Tesla factories. And that might be the perfect place for him because they could stay plugged in. But in terms of a mass market, it does raise the question of when are we going to be willing to have a robot that has to charge itself every hour? Hey, if it could charge itself, maybe it's not that bad. Just go sit on that chair over there. There's a pointy thing. Just sit on that pointy thing there. You'll be fine. Other people pay a little bit of attention to Tesla now suing the European Union about tariffs. Tesla does get tariffed a little bit less than some of the other Chinese makers in the European Union. And Tesla accounts for 28% of all Chinese-made EV imports into the European Union. But I don't know that this lawsuit is really going to go anywhere. In my opinion, this is messaging. I'm not very optimistic that they're going to succeed in this, since it is their right to implement tariffs, and Tesla has lower tariffs than the others. But Tesla's still trying. It's probably a messaging thing to sort of be pro-Tesla and anti the EU, which seems to be a popular argument by Musk these days. Anyway, the new Model Y does have about 3 to 7% more range, front camera for better parking, and some better lighting on the exterior, some cool light bars. We are looking at a potential consensus decline in margins for Tesla earnings coming up, looking for about 15% on gross margins in Q4. That would be down from about 15.6% in Q3, excluding those FSD deferred revenues, which those did bump their margins up, but you kind of have to parse that out, which doesn't happen on earnings day. You have to do that a couple days later when they actually release their 10K or their 10Q. Anyway, big things we're going to be looking for are going to be progress on robotaxi development, Optimus progress, battery progress, especially in the face of this, and we'll keep an eye on what ends up happening. We'll be covering earnings, of course. Vivek kind of hinted now more officially on Jesse Waters' show that he left Doge on good terms. He's going to divide and conquer because he wants to run for elected office. Then we've got to hit the dad joke of the day. So dad joke of the day, I'll start with the joke portion. I'm going to hit the daily wealth, and then we'll do the punchline. So get ready for it. I think my wife's been putting glue all over my firearms. Keep that in mind. Let me quickly hit the daily wealth. Daily wealth for today is that there's a story of a teacher locally here in Ventura, California, who used to ask his students every day, not every day, every year when they went to graduate essentially to the next grade. This was about 10th grade. So the students were 15, 16 years old. Hey, what do you want to be when you grow up as you're leaving and graduating from this? And he used to get answers like doctor, astronaut, firefighter, teacher, fireman, software engineer, mechanical engineer, pilot, whatever. Used to get these sort of careers that were respectable and people look forward to. Recently, he said, this has been for decades. He's been getting answers like that. So nothing new and surprising. More recently, however, he's been getting answers from younger generations like, I want to be a billionaire. And it's over and over and over again. And some people are looking at that and wondering, is social media making us more relative than ever before, where we're constantly comparing ourselves to others to where we're basically never satisfied with what we have? kind of sad. And it's an interesting comparison. And it really should give us an opportunity to look at what we have and say, are we actually grateful for what we have? Are we grateful for the position that we're in? And what are we doing to improve our position? Because we're always thinking about improvement. But have we gotten to the point of never being satisfied? And are we therefore making ourselves miserable? Interesting. So now for the dad joke. I think my wife's been putting glue all over my firearms. She denies it, but I'm sticking to my guns.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.